Hello, my name is Kenzo Tsujimoto, Chairman and CEO of Capcom. Thank you to our guests. Thank you all for making time during this busy results season to attend our financial results presentation. Thank you for survey participation. Also, each year we receive evaluations and comments regarding our medium-term goals, corporate strategy, IR activities, and the like from domestic and international analysts and investors. We utilize these opinions as one of our resources in management decision-making, and as such, I would like to express our gratitude for your cooperation with this survey. Today's meeting. Today, I will be going over the outlook for our medium-term business goals. This fiscal year marks 3 years since we announced our medium-term goals in May of 2014. Presently, we are leaving them at cumulative operating income of 70 billion yen and an operating margin of 20% for the fiscal year ending March 2018. First, looking at operating income, if we deduct the portion for the 4 fiscal years ending March 2017 from the cumulative target, our operating income for the March 2018 fiscal year would be 23.5 billion yen. In order to achieve a figure this high, not only would our own business obviously need to grow, but it is necessary that our Asian business activities, such as those with Tencent, would need to expand in tandem. Regarding our title lineup for the next fiscal year, we plan to have one that is on par with or better than the lineup for this year. Also, we expect to add profit with further improvements made to our digital download ratio. What's more, there are the potential positive contributions from growth in the VR market and esports business. On the other hand, some may feel our 13.6 billion yen in planned operating income for this fiscal year is low. The reason for this figure is our major releases are concentrated in the second half of the year. The lifetime unit sales for these titles will be split between this fiscal year and the next. As for this situation, it ties into our title portfolio for the 52-week map and 60-month map, and is due to us judging that based on what we learned from the past year of operations, it's best to spend a little more time in developing and running a high-quality title that will perform well globally. For example, some aspects of Street Fighter V needed more polish, such as the lack of content and server issues at launch. Accordingly, we feel it's better to give a little more time to development than before and have made slight adjustments to our portfolio. Profits may take 1 or 2 years longer to stack up than initially expected. However, we will be firmly strengthening our brands. That being said, even looking at Capcom's growth exclusively, we expect at the very least growth in excess of 10% to continue. Elsewhere, since last fiscal year we've begun our Asian business in earnest, and at the moment Monster Hunter Online is making progress. Monthly net sales are in line with expectations, and we believe that this title will begin contributing to our company from here out. While assiduously producing results for Monster Hunter, we plan to make further developments such as rolling out other titles and expanding into other countries besides China in the Asian region. Achieving an additional 9.9 billion yen after this fiscal year in order to hit 23.5 billion yen is a steep hurdle. However, in addition to the stable growth of our company, we aim to achieve this by incorporating growth in Asian areas outside of Japan into our results. I will now break down this explanation by business segment. The remaining figures for each segment in March 2018 fiscal year can be seen in the table. Looking at the table, you can see that achieving our goals in digital contents and amusement equipments is within the scope of feasibility. On the other hand, arcade operations, other businesses, and adjustments look to be more challenging. If you replace the March 2018 fiscal year figures with ones on par with this fiscal year's plan, the unachieved amount for these 3 amounts to 7.1 billion yen. Accordingly, while we will work towards minimum 10% growth for our company, we will offset this balance, including negatives, with growth in Asia, which was not included in our plan at the start of the year. Next is our operating margin. As you can see in the graph, it has improved to 16%. We are aiming for 20%. We will capture the remaining 4 points via steady point-by-point improvements from Capcom's own business as a base, with a boost from our ventures in Asia on top. Even if we exclude licensing in Asia, we believe we can achieve this with only a 1 to 2 year delay. I will now go over each business segment. 5 years of results can be seen in the table. First, we expect that achieving our medium-term goals for arcade operations and other businesses will be challenging. This is due to the market hitting a downturn from issues such as the increase in consumption tax, as well as new developments that we had not accounted for when setting these goals, such as our new R&D building and a late entry into global licensing. Profitability has been declining in amusement equipments since the September 2014 Pacislo rule change. However, we believe that we can improve profitability here in the next fiscal year via thorough cost control. In digital contents, we are overall on track to achieving our goal. The reasons for this are largely in consumer, namely 1. Improvements in title outsourcing, 2. Streamlining internal title development, and 3. Improvements to the ratio of digital download sales. This is offsetting underperformance in mobile and PC online. In order to achieve a 20% consolidated operating margin, we must fill in the gaps left by underperforming businesses. Digital contents will cover them. At present, profit margins in mobile and PC online are close to zero, but these businesses have the potential to hit margins of 30%. Moreover, if we are able to expand our high-margin Asian licensing business, we believe hitting an operating margin of 30% in digital contents is also possible. To summarize, in order for us to increase profits and improve our margins, we must give handling the following 5 points priority. Foremost, 1. Provide a robust lineup of titles that utilize Capcom's popular IP and focus on further strengthening digital downloads. 2. Strengthen the expansion of licensing in Asia and boost earnings in the Chinese and Asian markets. And additionally, 3. Under the new development structure in mobile contents, develop titles with the focus on Capcom IP and pull ahead from behind. 4. Build out PC Online's Dragon's Dogma Online, which is entering its 2nd year. 5. Establish a system in which we release 4 models per year that utilize popular IP in Pacislo while improving margins via thorough cost controls. By increasing the title lineup in each region and each segment, we will realize stable growth for Capcom as well as expansion of our licensing business in Asia and push forward towards achieving our medium-term goals. Good day to all of you. My name is Haruhiro Tsujimoto, President of Capcom. Today I'd like to discuss our business strategies and plans moving forward into the fiscal year ending March 31st, 2017. Firstly, on the point of growth strategies, I'd like to give an update on the consumer, PC online, and mobile market. The global game market continues to grow, and we expect the rapid growth of the mobile market to continue in the future. At our financial results briefing last year, we stated that the market was expected to reach approximately $90 billion in 2019. However, the latest market prediction has it breaking $100 billion in 2017. The mobile market in particular is expected to grow more than 30%, continuing its role of growth driver for the games market. More than ever, our company will focus its efforts on this market. On the other hand, the consumer market seems like it will stabilize, with the focus on core gamers. With new technology like VR coming onto the scene, along with further adoption of current-gen hardware, we believe we are entering a period where we, as software developers, will be able to reap the fruits of our labor in earnest. Continuing on, I'd like to get into the 2 growth strategies that we have established. With our consumer business, we've built a structure in which we can steadily bring out new franchise releases in accordance with our 60-month and 52-week maps. As this system is already completed, we will focus on the operational side of things from this fiscal year as we move forward. With regards to our digital download strategy, in addition to full game and additional content sales, we've made good use of our library of assets via HD remaster releases. In terms of these HD remasters of catalog titles, last fiscal year, Resident Evil 0 HD Remaster performed favorably with approximately 800,000 units sold, and additionally we released Resident Evil 6 for PS4 and Xbox One. This year marks the 20th anniversary of the Resident Evil franchise. We plan to release PS4 and Xbox One versions of Resident Evil 4 and 5, and what's more, we are currently working on a full remake of Resident Evil 2. Further, we are actively adapting to the latest technologies and trends, such as VR and esports, and are looking to create business opportunities in markets that are related to the consumer business. As for our online business, we are committed to doing whatever it takes to create a success in the growing mobile contents, and by merging Capcom's mobile business with Beeline, these will come together as one underneath our new division to face this challenge. In PC Online, we plan to utilize the know-how we've cultivated via our cooperation with Tencent Holdings Limited to move ahead, forging additional partnerships utilizing our catalog of IP in Asia. Next is our earnings forecast for the 2016 fiscal year. We anticipate the results of our structural reforms and development to become tangible, meaning growth over the last fiscal year in all items from sales and profit down as we plan to expand our lineup in each business segment this year, starting with the consumer business. We're forecasting consolidated net sales of 85 billion yen, an increase of 7.9 billion yen over the last fiscal year. Operating profits of 13.6 billion yen, an increase of 1.5 billion yen over the last fiscal year. An operating profit margin of 16.0%. Ordinary income of 13.3 billion yen, an increase of 1.9 billion yen over the last fiscal year, and net income attributable to owners of the parent of 9 billion yen, an increase of 1.2 billion yen over the last fiscal year. Our earnings per share forecast is 160.06 yen. Our dividend forecast calls for an interim dividend of 15 yen and a year-end dividend of 25 yen, resulting in a 40 yen dividend for the fiscal year. Next, I'd like to go over a summary of each business segment. First, I will go over developments in our digital contents business for this fiscal year. We're anticipating higher sales and profits over the last fiscal year due to the release of major new global titles this year and via utilizing our catalog of past assets. In consumer, we will be rolling out new titles on the global stage. In addition to Monster Hunter Stories and other new titles in popular franchises, we're planning major title releases. VR has been a hot topic of late. We are continuing research and development in this area. We will also look to expand into the esports field via Street Fighter V this fiscal year. With digital downloads, we are continuing to bolster our full game and additional content offerings. In particular, we plan to extend the life of titles launched last fiscal year, such as Street Fighter V via regular updates. We are forecasting our ratio of digital sales to increase to 29%, up from approximately 26% in the last fiscal year. Next, I'd like to discuss our planned sales lineup for this year. At present, we cannot yet communicate our entire title lineup for operational reasons. However, in addition to new titles that we have announced, such as Monster Hunter Stories, Ace Attorney 6, and Resident Evil Umbrella Corps, we are planning to release the titles listed on this slide. For the fiscal year ending March 2017, though the number of titles will be 10 less compared to last year, we anticipate an increase of 1.5 million units in sales due to focusing on the sales of major titles, for a total of 16.5 million units sold in the consumer business. The number of titles will be lower because, aside from a decrease in distribution titles, we are focusing on the sale of major releases this year, so the number of mid-sized titles will decrease. With regards to unit sales by region, in Japan we forecast unit sales to be lower by 1.3 million year-over-year to 3.4 million units due to the rebound effect of releasing Monster Hunter Cross in the previous year. However, because we are releasing more major titles this year compared to last year, we expect the number of package unit sales outside of Japan to rise. We forecast sales in North America to increase by 900,000 units to 3.5 million units, sales in Europe to increase by 400,000 units to 1.6 million units, and sales in Asia to increase by 100,000 units to 500,000 units. For our digital download sales forecast, Along with an expected increase in digital download unit sales for new titles, the unit sales for catalog titles should also increase. We estimate an increase of 1.4 million units year over year for a total of 7.5 million units. Continuing on, we will examine our strategy for the Mobile Contents Division. Under our new comprehensive global development structure, we will focus on producing hit titles that utilize Capcom IP. For the Japanese market, this fiscal year we plan to strengthen development of games using Capcom IP and release at least 4 new titles, including Mega Man, Monster Hunter, and Sengoku Basara. Also, Monster Hunter Explorer has hit 4 million downloads and is by and large proceeding steadily in line with our initial expectations. However, our aim is to further invigorate this title via improvements to its ARPPU as we move forward. Moreover, as our expansion into the Asian region is necessary, we will continue to actively seek out partnerships with local companies there regarding titles that have performed well in Japan. Now I would like to discuss our strategy in the PC online business. Here we plan to focus on the stable operation of our major titles as well as maximizing earnings opportunities via expansion overseas. We will continue stable operation of Monster Hunter Frontier G, but will proceed with establishing Dragon's Dogma Online, which began service last fiscal year, as our core domestic title. Further, we will move forward with introducing Capcom titles into the Asian region. Monster Hunter Online has already begun service, and we will proceed to invigorate this title in China by fully cooperating with Tencent towards breaking into the top rankings. Otherwise, we plan to roll out existing Japanese titles to the Asian region, beginning with China. Moving along, we will look at our forecast for the digital contents business. This year, we are forecasting net sales of 59 billion yen, an increase of 6.5 billion yen over the last fiscal year, 14.3 billion yen in operating income, an increase of 2.2 billion yen over the last fiscal year, and an operating margin of 24.2%. Breaking down net sales, we expect 33 billion yen in package sales, an increase of 1.8 billion yen over the last fiscal year, and 14 billion yen in digital download sales, an increase of 3.1 billion yen over the last fiscal year, for a total of 47 billion yen in consumer. In mobile contents, we expect 4 billion yen, an increase of 700 million yen over the last fiscal year, and in PC others, we expect 8 billion yen, an increase of 900 million yen over the last fiscal year. Next is the arcade operations market. First of all, market conditions continue to be severe for both sales volumes and the overall number of arcades. As market conditions continue to be adverse, our business strategy is to persist in focusing on streamlining operations while creating revenue opportunities in areas other than amusement arcades, such as joint establishments like restaurants that incorporate our characters or Capcom merchandise retail shops. We're forecasting net sales for existing arcades to be even year over year and plan for 3 new arcades to open and none to close, giving us a total of 37 arcades. Further, for this fiscal year, we expect net sales of 9 billion yen, the same amount as last year, operating income of 800 million yen, also the same amount as last year, and an operating margin of 8.9%. Continuing on, here are the pachinko and pachislo machine and arcade machine markets. The pachinko and pachislo machine market slightly shrank. This was due to a delay in the release of titles for companies across the board, stemming from regulation changes for the model certification methods of pachislo machines in 2014. As with the amusement arcades market, the arcade machines market continues to shrink. Next, I will discuss our amusement equipments business strategy. We expect an increase in sales and profits for both pachinko and pachislo and arcade game sales due to releasing new products that utilize popular IP. We are aiming to offer a stable supply of cabinets featuring popular Capcom IP in the PS business. Beginning with Super Street Fighter 4, which went into operation in April, this year we plan to sell 4 models, totaling 55,000 units in sales. In the arcade game sales business, we plan to launch new machines that utilize popular properties of other companies, including Mario Party Fushigi No Challenge World, which is scheduled to launch in the summer of 2016, and Attack on Titan Team Battle, which is scheduled to launch in the winter of 2016. For this fiscal year, we are forecasting 15 billion yen in net sales, a 1.7 billion yen increase over the last fiscal year, 3 billion yen in operating income, a 200 million yen increase over the last fiscal year, and a 20% operating margin. We plan to raise awareness of our core brands and maximize revenue by continuing to promote our single content multiple usage strategy in the other business. The animated TV show Gyakuten Saiban Sono Shinjitsu Igi Ari, Ace Attorney, began airing from April 2016 and has enjoyed favorable ratings. We are already seeing synergistic effects, such as growth in orders of the related title Ace Attorney 6. Moreover, Monster Hunter Stories is also slated to get an animated TV show in 2016. We plan to maximize unit sales of our Monster Hunter Stories games scheduled for release this year via coordinated promotions with the show. Also, in order to appeal to non-game users, this year, once again, we will carry out the expansion of attractions utilizing our IP at Universal Studios Japan as part of the Universal Cool Japan initiative. What's more, Hollywood film Resident Evil: The Final Chapter will be getting a December 2016 advanced release in Japan. With this year marking the 20th anniversary of the Resident Evil franchise, we will work to promote sales of related titles in the series via coordinated promotions. In our forecast for this business, net sales should remain the same as last year at 2 billion yen. Operating income is expected to fall 300 million yen from last year to 200 million yen. The operating margin is expected to be 10%. The decrease in operating income is due to booking a depreciation expense for 2 new R&D buildings, including our newest R&D building number 2 that was completed in January 2016. We expect the burden of this depreciation expense to continue in the future. This ends my presentation. All of us will continue to work together as one to achieve our business objectives this year. Thus, we ask for your continued support. Thank you.